Good morning. This is Horizons Middle East and Africa, our top stories this morning. Fed officials give conflicting rate cut outlooks for this year, but Asian stocks and Wall Street futures rally on calls for cuts by Chris Waller and Mary Daly and strong U.S. data. As we enter the final day of the G20 meeting, South African Finance Minister Enoch Godongwana says they're nearing a deal on a communique. Plus, the crypto sector gets a major win as Congress passes a bill regulating stablecoins, paving the way for their broader use in finance. Well, it's just gone 8 a.m. across the Emirates, everybody. It is Friday, TGIF. I'm Jumana Versace in Dubai. Ending the week, I would say, on a more positive note for Wall Street, tracking gains for the week as a whole. And another record high, all-time record high for the S&P yesterday. We briefly touched 6,300, though we pulled back from that a couple of points below, but ultimately all-time record high. And I've got to say, I was looking at all the data that came through from the U.S. this week. Strong data. So we've had retail sales. I'll talk about that in a moment. CPI actually underperforming, as we spoke about earlier this week. A lot of strength coming through from those U.S. bank earnings. And therefore, the picture for the U.S. economy seems to be okay. And of course, President Trump downplayed those concerns about the removal of the Fed Chair Jerome Powell. So positive. And this is the picture today. Futures also look like they're gearing up for another positive session as well, up 15 basis points. Two-year yields today, I wanted to show the front end of the curve, 3.89 is where we're at. Plenty of central bank commentary coming through the last 24 hours, the likes of Chris Waller, quite dovish, suggesting that they should start cutting rates now. Mary Daly suggesting that they should cut rates twice this year. And in terms of what's priced in, we've got about 45 basis points priced in until the end of this year, about 120 basis points cumulative by the end of next year. So will the Fed live up to those expectations? USD slipping a little bit, though I should say for the month, the USD is actually having a positive month. So despite the fact that the greenback's down about 8-9% this year, for the month of July, it's actually been a better month. And then Brent is slipping down, well, barely this morning, around 10 basis points. But essentially, we're trading around 69. We've been trading in the $68 to $70 range since that OPEC Plus announcement. That tells you that the market has readily or will be readily absorbing the extra barrels coming to the market, at least in the summer season. Switching over just to highlight the strength of the U.S. retail sales figures that came through yesterday. And take a look at that green bar. So way above estimates. The actual number came in at 0.6% versus 0.1% estimate. And there you have it, the green bar suggesting that the U.S. consumer and spending has been strong. And this is contrary to expectations of a slowdown and the impact that tariffs could have. So strong data as far as spending is concerned in the U.S. Let's pick up on how Asian markets are faring. Avril Hong is in our Singapore studio. Avril, what are you watching out for?
Yeah, Asia stocks are advancing, tracking Wall Street. We're also keeping tabs on tech because that sector is doing well today, given TSMC's bullish outlook, even though it sounds a bit prudent given the macroeconomic uncertainties. We are seeing that rally quite nicely in the stock of TSMC. It's also helping to lift some of the other tech-related stocks in the region. We are focusing on Japan, the markets ahead of the upper house election that still remains too close to call. We also had core CPI numbers cooling more than expected, but still well above the 3% level. And overall, there isn't enough in the data to help ease concerns that stagflation isn't taking hold in Japan. So in terms of stocks in the country, we're seeing it more or less moving sideways, maybe a bit softer. There's a bit of a drag from chip gear maker Disco. In terms of the yen, we're seeing it nudging weaker towards the 150 level against the greenback at the moment. And this is despite the pressure that's coming on the dollar, given all the Fed speak. Jumana?
Yeah, and of course, heading into those upper house elections this weekend. Avril Hong in Singapore, thank you so much. Now, Fed officials are divided over the central bank's rate policy path, with some encouraging further cuts and others supporting a wait-and-see approach.
I believe it makes sense to cut the FOMC's policy rate by 25 basis points 2 weeks from now. And looking to later this year, if, as I expect, underlying inflation remains in check, with headline inflation data reporting modest but temporary increases from tariffs that are not unanchoring inflation expectations, and the economy continues to grow slowly, I would support even further 25 basis point cuts to move policy towards neutral.
So I'm of the mind that, that the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
I find it appropriate to hold our policy rate at the current level for some time.
Joining us is Mahjabeen Zaman, head of FX research at ANZ. Good to have you with us. Let's just start with the performance of the greenback this week. There's been a lot to digest for anyone looking at U.S. markets between bank earnings, actual data that's come through, and the CPI prints as well, in addition to all the noise around the Fed Chair Jerome Powell's future. That being said, the dollar is actually trading more positive for the week. Do you think the worst of the declines in the greenback are behind us?
No, not at all. Actually, the one thing we need to take a step back to see is that we are in the summer months and there is thin liquidity. So you are going to see exaggerated moves. And this is coming off the back of extended short dollar positioning. I mean, the dollar has retreated more than 10% so far this year. That's a pretty quick and sharp downward move. And I think there's going to be a bit of consolidation here. Of course, there is risk on in the markets, as you said, on the earnings season. What we have seen this year is dollar is more trading like a cyclical currency rather than a haven bet. So I think that's supported the dollar upside. Last but not least, what we are watching on and we're a little bit cautious of in terms of the next couple of weeks and months is the liquidity dynamics in the US. We do know that the TGA, the Treasury General Account, will be replenished, and that could reduce some of that liquidity, tighten funding conditions. We have seen that in previous years. While we don't think that's a major risk or a long-standing risk, I think that's something to look at in the next couple of weeks and months.
So here's the thing about the USD. Where is the major catalyst for another move down going to come from? We know from conversations with White House administration officials that the suggested tariffs that were announced on Liberation Day are a ceiling or a cap, and ever since then, they've been moving steadily down. We're now talking about a baseline rate of anything between 10 and 20, as opposed to some of those much higher punitive rates. So where is that negative surprise going to come from? The U.S. economy is holding up.
I think the market is somewhat still not fully pricing in the possible economic damage that we could potentially see going forward. I think, that taco trade is still priced in. And I think given, obviously, the U.S. administration has retreated from those extreme levels from Liberation Day, but still we are in a much worse situation than we were pre-Trump in terms of, especially for the U.S. in terms of the consumption tax that they're going to start seeing come into play into their price levels. So I think at the end of the day, for the next trigger for the dollar lower, in my opinion, is, I think the U.S. administration has been out there. They have been signaling a weaker dollar bias. So signal matters more than noise, and the data will turn. Now, the jobs numbers that we have been seeing throughout the last few months, it does show, while the headline growth numbers look pretty good, but when you look at the underlying data, there is more firing, less hiring, all of that coming into play. And I think that data will turn into Q3 and Q4. And we do expect to see the Fed easing in the next months.
Okay, fair enough. Let me ask you about a currency pair that we are watching closely into the weekend. That is dollar-yen. Inching, creeping back towards that 150 level again. What do you see happening with the yen from here? There's a lot of bearishness, I've got to say, being expressed both in FX and in yields as far as those long-term yields are concerned too.
Look, I think for Japan, there's just a lot going on right now. Of course, you spoke to the higher yields. We've got a 40-year JGB auction coming up as well, and all eyes to see what the demand for that looks like. But at the same time, we also have U.S. yields moving higher. We've also got a little bit of cautiousness around BOJ rate hikes because when we look at the tariffs, the U.S.-Japan tariff negotiations, they're still ongoing, and it doesn't look at this stage that the U.S. is going to back down as from what they've already proposed. So obviously there will be some impact to Japanese growth at some point, at least for the exporters. And to me, if you're looking to raise rates, Bank of Japan, over a period of time, and inflation supports that. But if growth is slowing, it's going to be pretty hard. So I think that's maybe factoring in. And obviously we're coming off, of course, the upper house elections that's due this week and as well.
Okay, a quick final question for you. What are your preferred plays right now in the FX space?
Look, it's like I think what we're going to see is this year, so far, we have seen for most part the Japanese yen outperform, maybe not right now, but we think that should move stronger thanks to safe haven flows because policy uncertainty is the #1 driver of markets or FX today. And of course, Swiss franc, which is the other safe haven currency out there, which will again has so far benefited and will continue to benefit from safe haven flows.
Mahjabeen, always good to have you on the show. Mahjabeen Zaman, head of FX research at ANZ. Now, up next, South Africa is calling for greater cooperation amongst the G20 as finance ministers and central bank governors wrap their meeting. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Africa is calling for greater cooperation amongst the G20 economies as finance ministers and central bank governors gather under the cloud of President Trump's trade war. The finance minister, Enoch Godongwana, told us he's concerned about the impact tariffs will have on the region.
My prayer, first and foremost, is that the deal should be made by August 1st. And secondly, we if it's not made, it'd be useful that we get an extension until we finalize the deal. Of course, the USA is a huge economy. If we lose a trading partner such as the USA is going to have a major impact and create more unemployment in the economy. And therefore, that should worry any Minister of Finance.
Our Chief Africa correspondent, Jennifer Zabazaja, is in Ballito, South Africa, and joins us now, bringing us all of those interviews. Jen, we've been talking about this, and I just wonder how much cooperation you actually can have in a G20 without a significant representation from the U.S. It's looking more like a G19.
Yeah, Jumana, that's a very good point that you're making. And I think if you talk to the leaders here, they're trying to maybe diffuse any sort of concern that they can't have any cooperation, right? Of course, front and center is, of course, a lot of the decisions that are come August 1st for a number of their countries. But they are here on the ground trying to hopefully come up with some sort of communique and agreement amongst each other. Or else many people are wondering, what are the purposes then of these multilateral forums and institutions? Now, listen, when we talk about cooperation, we have seen that over the past day or so. We were just hearing from Enoch Godongwana. He and central bank governor here in South Africa, Lesetja Kganyago, are the co-hosts of this finance meeting. They talked yesterday for most of the day about a lot of risks to the global outlook, not shying away from saying that the concern here is really the unevenness that we're seeing amongst a number of these countries, but potentially then there is an opportunity to come together. And so we did see yesterday focused more on institutional or reforms of multilateral institutions. That is something that South Africa, as the G20 presidency, has made a priority. Today, the biggest the priority for the presidency in South Africa is to talk about the impediments to growth for sub-Saharan Africa and the African continent. And they're trying to do that in the context of reforms of the global picture. And really the key point that we're going to be watching for here is, will we get an agreement at the end of today? And we also talked to Enoch Godongwana about that. So that is really what we're watching for later this afternoon.
Yeah, I mean, that's always the challenge at these summits. And we saw it at the G7 not so long ago with the G20 today. How likely is it really that we're going to get a joint communique? And if we do get a communique, what are they going to be agreeing on in the communique?
Exactly. Right, and that is what we pose to Enoch Godongwana. What is the likelihood that we're actually going to see a communique coming up? He said that he believes, he is hoping that there will be an agreement. But at this point in time, and when we spoke to him yesterday, there were still some sticking points that they had not agreed on. We talked to Lesetja Kganyago earlier in the week, who said it's not necessarily that these forums need to come up with a communique. But as you stated there, it is important to to at least have some sort of documentation that these parties agree with each other. This is the third finance meeting of this G20 presidency. The last two did not come up with an agreed upon communique. Instead, they had a statement from the chairman. So right now, we're going to be paying close attention to two sticking points that we heard, and that is sustainable financing, which we heard the U.S. is still not necessarily behind, and also growth imbalances that China reportedly is not behind. So those are the two sticking points. We'll see whether or not they can actually come to the table and all agree upon one signed document by the end of today.
Yeah. Jen, looking forward to the rest of your coverage today, and beautiful shots behind you as the sun rises over in Ballito. Jennifer Zawazaja, our chief Africa correspondent in Ballito, South Africa. Now, the U.S. Congress has passed the first federal legislation to regulate stablecoins, clearing the way for broader use of the technology in everyday finance. The bill was the centerpiece of a legislative push President Trump has dubbed Crypto Week. Let's get more with Bloomberg MLive strategist Mary Nicola. Mary, what do we know about this bill? Because it actually goes a long way towards taking stablecoins and introducing them to mainstream. So how far along that process are we really?
Yeah, I mean, I think it's going to still take more time as the legislation comes through. But at the same time, I think the key thing here to focus on is that it does add legitimacy to this market. And for a long time, this market was, there was a lot of concern from especially investors over the fact that there is a lack of regulation, that especially when you had incidents like FTX that came through. So having the government regulate the industry offers a little bit more of legitimacy, and then offers the industry to expand even more. And I think that's one of the key things, especially because stable coins are growing in terms of becoming an easier way for payments, and that's likely to reverberate. So I think the impact of it, yeah, and the fact that the government is behind it is absolutely critical.
Mary, but not everyone's happy about this. What if some of the key banks and institutions had to say about the passage of the legislation?
Well, some of the critics also, especially within in the Congress and among legislators, is the fact that if there is a loss and some of the retail investors lose, that it's going to be difficult for the governments to step in and offer some sort of backstop. Remember, for example, you have something like the FDIC, which if a bank fails, then the government steps in and supports the average retail investor. So obviously, there's still going to be a lot of holes that need to be plugged in, but at the same time, it does give an avenue for things to move in a direction that a lot of people who were advocates of stablecoin, who were advocates of Bitcoin, to really just give a runway that legitimizes it and makes it even more ubiquitous in the markets.
Bloomberg MLive strategist Mary Nicola, thank you so much for the latest. And this, of course, as Bitcoin continues to make new highs. Now, coming up, Israel says it has halted airstrikes on Syria as sectarian clashes in the south of the country ease. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Israel has signaled it suspended airstrikes on Syria after a new ceasefire between groups fighting in the Druze-majority southern province of Suwaida. On Wednesday, Israel struck Syria's military headquarters in Damascus and moved more troops north, citing security threats from the increase of Syrian military forces near the border. Joining us now to unpack all of this is Dana Khresh, Bloomberg's UAE bureau chief. Yesterday, we were talking about not only the infighting that is taking place amongst these minority groups, but also Israel's attack on those military headquarters in Damascus. Just walk us through the developments of the last 24 hours, Dana.
Good morning, Jumana. Yes, so the ceasefire that was announced yesterday seems to be still holding, and Israel stopped the airstrike, but it did say that it wants to establish a demilitarized zone on its border. And we heard from the IDF chief of staff yesterday saying that they will not allow hardliners, extremists on their border as well with Syria. And, when the clashes erupted, government forces from Ashara, which Israel deems as extremists, and of course Israel sees Ashara that way as well, they started striking Suwaida and saying in defense of the Druze, of course, but they wanted to move these government forces away from the border. And of course, the Sunni Muslim Bedouins that were clashing with the Druze. Now, Israel has said that they vowed to defend the Druze, and some of the Druze actually want Israel's protection here. But when the strikes on Damascus happened, that was Israel very strong, dangerous message to Sharia to say that when the gloves are off for Israel, then they would be, and they can strike a Sharia anywhere and strike in Syria anywhere. And the Damascus attacks were actually near the presidential palace and on the central command headquarters. Now, this was a very dangerous escalation, and we saw maybe that actually put pressure on Sharia to move quicker with a ceasefire. But again, he is under pressure domestically as well to be able to protect minority groups and not allow any maybe divisions within these groups.
What has been the response out of neighboring Arab states, Dana, to what's been going on in Syria?
We saw most of the Gulf countries and Arab condemning Israel's attacks. And that's, because destabilizing Syria at this moment in time is very dangerous for the region. Let's not forget, Saudi Arabia, Qatar, and the UAE, they already started signing agreements. We saw the UAE signing agreements to develop the port. Qatar is helping out with energy bills and also settling Syria's debt. So they want to revive the economy there, because when it didn't, and when Syria collapsed into a civil war, as what happened after 2011, we saw, the groups, the likes of Islamic State rising, and that would not just destabilize Syria, but also Lebanon, which is also at a very dangerous point, I would say, very weak domestically, and Hezbollah's arms are still there. The Gulf countries and Arabs as well, they don't want to see Iran regaining influence, be it in Syria or in Lebanon, as what happened back in 2011 during the civil war. So this is a dangerous moment, and they want Israel to stop the attacks in order to keep Sharia in power, who now they have trusted and forged really close ties with.
Yeah. Dana Khish, Bloomberg's UAE Bureau Chief, thank you for the overview. Now, coming up, high stakes for Japan's Prime Minister in Sunday's upper house election. We'll have a preview amid jitters of a defeat for the ruling party. That's next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Fed officials give conflicting rate cut outlooks for this year, but Asian stocks and Wall Street futures rally on calls for cuts by Chris Waller and Mary Daly, and strong U.S. data. As we enter the final day of the G20 meeting, South African Finance Minister Enoch Godongwana says they're nearing a deal on a communique. Plus, the crypto sector gets a major win as Congress passes a bill regulating stablecoins, paving their way for the broader use in finance. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, record highs, everybody, for the S&P and NASDAQ completely erased all of the fears in April and have inched back to, once again, record highs. S&P sitting just shy of 6,300 now on back of a week of, I would describe as very solid data, both on micro with the U.S. bank earnings, also Netflix after hours. We're going to talk more about that. And then some of the actual data that's come through, the U.S. retail sales numbers yesterday, also surprising to the upside as well. So strong signals actually coming through from the U.S. economy that has caused a significant rebound in Wall Street. So S&P futures this morning leaning towards the green as well. Two-year yields, lots of Fed commentary coming through, leaning towards the dovish side. You've got Chris Waller talking about imminent rate cuts, Mary Daly talking about 2 rate cuts. In terms of what's priced in, we're still sitting at around 45 basis points of worth of rate cuts. But next year, obviously is going to be the big one once Fed Chair Jerome Powell, if not removed before, steps down in May 2026, the feelings that he will be replaced by somebody more dovish. Now, the USD is slipping a little bit this morning, but still on track for a good couple of weeks in July. It's up about 0.5%, so stabilizing at this point despite the pullback we've seen this year. And then Brent sitting at $69, about 0.5% firmer, indicating that those extra barrels that OPEC Plus have put back to the market have not dented energy prices significantly as of yet. Switching over, U.S. retail sales, and here you can see quite clearly the green bar indicates the strength in the data, surprising to the upside, 0.6% month-on-month versus 0.1% expectations. So some strength coming through from the U.S. consumer, and that was one of the catalysts for the market rally yesterday. Now let's turn to Japan. Investors are bracing for a potential triple dip in Japanese bonds, stocks, and the yen after Sunday's upper house election. It comes as polls point to a defeat for Prime Minister Shigeru Ishiba's Liberal Democratic Party. And as we say this, we've got 20-year JGB yields falling 5 basis points, got 30-year JGBs falling 6 basis points. So a lot of market volatility. Very happy to say that Bloomberg's North Asia economy and government editor Yuko Takeo joins us for more. First of all, there is an expectation, it seems, that LDP, the ruling party, won't be able to clinch victory in the upper house. Talk us through what has been going on and what the latest polls are projecting.
So whether or not the ruling coalition manages to maintain the majority, that's the biggest question for Sunday. And right now it's looking pretty shaky for Ishiba's coalition. If they do lose their majority, there's a few scenarios that can play out from here, but broadly, it will probably mean the LDP and Komeito will have to make more concessions to opposition parties. That's what the polls are broadly showing for now. If they do have to make a concession, that means more fiscal spending or tax cuts. Most of the opposition parties in Japan are calling for at least some kind of cut to the sales tax. And that's feeding into the kind of jumps in yields we've been seeing in the Japanese bond markets this week. So if we do see a big loss for Ishiba on Sunday, well, we should expect more volatility.
Yeah, so that's the fiscal outlook. But let's talk about the growth outlook. We've got a big deadline coming up on August the 1st, vis-a-vis those tariffs with the U.S. The U.S. Treasury Secretary Scott Bessent also visiting Japan next week. How could his visit impact what happens in the run-up to August the 1st?
Right, so Treasury Secretary Bessent is here in Japan already and will be in Osaka on Saturday. And he's in Japan for the first time after Japan's chief trade negotiator Kazawa has flown no less than 7 times to the US already for trade talks. But the bottom line is not much has come out of it so far. Bessent's set to meet with Prime Minister Ishiba later today and is going to the expo in Osaka tomorrow. But the problem is that the US side seems to be reluctant to talk too much about trade while Bessent's here. The underlying issue remains that the US and Japan still aren't seeing eye to eye on cars. The 25% sectoral tariffs is hitting Japanese car makers' profits hard, while the US sees this as a key area to reduce their trade deficit with Japan. And it seems difficult to come to an agreement over it. So all in all, the expectation is there's unlikely to be too much progress as Japan heads into the upper house election on Sunday, which is bad news for Ishiba.
Interesting timing for Scott Bessent's visit as well. Yuko Takeo, thank you so much. Now, the Bloomberg GCC Sovereign Index has hit a historically low point of 80 basis points, with the UAE and Oman sovereign spreads reaching new lows in July. For more, we're joined by Apostolos Bantis, the EM fixed income investment specialist at UBP. Let's just start maybe specifically with what's been going on with some of these GCC spreads. I think many people around the world would be surprised to hear that some of these GCC credits are trading at these historical tights, especially given the 12-day war that occurred last month. Why do you think it's the spreads and these bond markets have been so resilient?
Good morning, Jumana, and thank you very much for having me on your show this morning. There are several reasons, of course, that we have seen GCC spreads tightening to historically low levels. First of all, the risk of tariffs for the GCC region are quite low. The region seems to be more immune, given the fact that they do have a low volume of exports into the US, and also that the GCC government, several of the GCC governments have committed large amounts of investments into the US soil. The technicals are also quite supportive, as despite the fact of new issuance coming out in Saudi, specifically both at the sovereign and the corporate fronts, demand for these new bonds remains quite strong. The risk of oil prices also is not that material, although it's behind the scenes always. Oil prices, despite the volatility that we have seen, stayed fairly close to the break-even levels. And that, of course, these are the main reasons that keeping spreads tight in this part of the world.
Can I ask you specifically about Saudi Arabia? Because we've spent a lot of time on this show talking about the macro factors in the Saudi economy and the fact that Saudi Arabia are running a deficit by design. There is some pressure on the revenue, the government budgets as well, so they've had to borrow more in the market. How is that extra issuance being absorbed?
As I said earlier, Saudi actually has been one of the GCC markets with the highest amount of issuance year to date, both at the sovereign as well as at the corporate front, but that has been absorbed quite well. Investors are looking more into the future prospects of the country, and yes, leverage is growing and is expected to grow, but we are starting still from fairly comfortable levels. The geopolitical risks, which historically have always been there, are not really impacting sentiment in this regard. And therefore, this is also the reason that we see strong demand and spreads tightening spread levels. Now, from a valuation perspective, obviously, Saudi bonds are currently fairly priced. They continue to offer some decent yields, and we do expect these yield levels to persist in the second half of the year, as the markets really are not factoring any material US rate cuts.
Yeah. I mean, I was looking at, say, some of the long bonds. You get a 6% yield, 120 basis points pickup over a U.S. equivalent. Okay, let's broaden it out. What do you think happens in the second half of this year, given how strong EM assets have traded despite the broader headwinds that you referenced, things like tariff and uncertainty about the global economic outlook?
I think there will be, of course, the markets have been very pessimistic about emerging markets. Everyone was negative in the beginning of the year in anticipation of the impact from tariffs. It turned out actually a different way. Returns for emerging market sovereigns have been quite strong. On the corporate front, also returns are matching and slightly higher than those of developed markets. Now, looking at it more broadly speaking, with US yields expected to remain at similar levels and perhaps with only 1 or 2 rate cuts, that it's not going to change significantly the outlook. The risks for tariffs are obviously there, and the noise will always resurface, but that is probably going to impact selective markets rather than the broader EM universe.
Are there any EM credits that you're more cautious on, that you think will be more vulnerable to the Trump administration's policy decisions in the coming months?
Certainly. I think the countries, the large emerging market countries that they are most impacted is Brazil, Mexico, China to a large extent, as well as South Africa. Each of them for their own reasons. Mexico, which of course has large trade with the US, it's also facing some number of socioeconomic issues, such as the immigration and fentanyl, which complicate the trade negotiations. Brazil also has quite a large exposure of agricultural commodities into the US, which could have an impact. China has the largest trade volumes, but at the same time that gives China a bit more of a negotiating power. And what is also interesting on Chinese bonds, the holders, the majority of holders of Chinese bonds are local investors that tend to be a bit more comfortable with the risk there and sticky into this market. And then, of course, South Africa, it's a smaller country with a lot of fiscal issues and high dependence on commodity exports.
Very clear. Apostolos Bantis, EM Fixed Income Investment Specialist at UBP, thank you for coming on. And coming up, Ghana's central bank expected to cut interest rates as soon as today. A bit of a surprise development there. We'll have the latest as inflation cools significantly for the West African nation. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The president of the Financial Action Task Force discussed global standards for virtual assets on the sidelines of the G20 meeting with our chief Africa correspondent, Jennifer Zabazaja.
What we did in the FATF was actually develop the first standard, and it was the FATF, the first organization at the international level that provided clarity on the definition and what countries should do in our area of mandate, anti-money laundering and combating terrorist financing. So we look at virtual assets from the side of not impeding the innovation, fostering it, but mitigating the risk that they have, because there is indeed risks in the sector of virtual assets. So we issued a standard, and there's a lot of clarity on how countries have to regulate it, supervise it, exchange information, and fundamentally for the service providers, the virtual asset service providers, the travel rule. This means, just as in the payment systems that we were speaking before on cross-border payments, we need that when there's a transaction on virtual assets, that there's a travel rule with the information of who is sending the virtual asset, who is receiving the amount, and that information is available for the other institution, but also for the authorities when they conduct investigations, and also to raise alarms when they are. So the FATF is mapping the development of the implementation of this recommendation, which is recommendation 15, actively.
That was FATF President Lisa de Anda Madrazo speaking to Jennifer. Now, Ghana's central bank could deliver a sharp cut in interest rates as soon as today after inflation cooled significantly in the West African nation. It comes after policymakers held an emergency meeting, shifting the date of its planned gathering forward from July the 30th. For more, Bloomberg's Andira Ganga joins us now from Kigali, Rwanda. You know, Andira, it isn't that common for central banks to bring forward the timing of their meetings. Suggests that there is potentially going to be an interest rate cut coming. Talk us through what we know.
Hi, Jumana. Absolutely. It's not common, but we've seen a lot of movement in Ghana. One, inflation significantly dropped by 5% from 18% to 13%. And this was a big drop that began causing a shift in the market. We've seen movement in interest rates, particularly the central bank's 56-day bill that has dropped by 10 percentage points from 28% to 18%. And this just signals that something could be coming from the central bank. This is a rate that is always tied to the benchmark. And because it's reducing, there has been anticipation that the central bank could be cutting rates. And what they want is to align the benchmark rate and the market rate and avoid sending mixed signals out to the market. That's why we saw them move this meeting from the 30th of July to the 18th of July to try and fast track this process. And this could usher in an easing cycle. Ghana has had a really tight monetary policy stance, particularly since 2022 when they defaulted on their debt. We saw inflation peak at about 52%, and they had to do that in order to bring inflation down to stabilize their currency that had lost nearly 60% of its value to the dollar. But now they're beginning to gain confidence, particularly because their currency is now one of the best in the world and inflation is low.
Yeah, well, I was going to say there's also the dollar angle to it. The fact that the USD has been so much weaker this year has been a boon for many emerging market countries, Ghana one of them, which gives the justification for a rate cut. So rates are sitting at around 28% now. How significant a cut are we expecting?
Jumana, we are expecting a really significant cut. It could be a really big cut from between 100 to 300 basis points. Economists surveyed by Bloomberg place it at about 25.5%. And this is going to be big news, particularly because rates were 28%. And the last time there was a meeting in March, they hiked the rates by 100 basis points. Then they decided to hold sometime in May. So a cut is very much welcomed. And this is from all facets in the country. The government, it means an ease of debt servicing costs, lower borrowing costs for the government and even for the private sector. Again, this is an economy that is just beginning to recover from default of their debt. Many businesses had to restructure their debt. Some defaulted. Others altogether decided not to borrow because they could not afford it. And this means that the private sector then suffers from a cash crunch. And a lower interest rate means that there'll be liquidity in the market which can help them jumpstart economic growth.
Bloomberg's Ondiroganga in Kigali, Rwanda. Let's see. Exciting stuff coming up from the Ghana Central Bank. Thank you. And coming up, Netflix shares fell despite the streaming video company reporting second quarter results that beat expectations. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Netflix shares fell in extended trading despite second quarter results that exceeded analyst expectations in every metric, with revenue topping $11 billion. The world's most popular paid streaming service also raised its forecast for full-year sales and profit margins. So things looking good for Netflix, with the price action after hours not so positive. Let's get out to Bloomberg's Shirley Zhao. So in 2025, Netflix stopped publishing the growth in their users. So where is the strength coming from? What are the reasons for these better than expected results?
So the second quarter is usually slower for Netflix because it typically adds subscribers at the beginning and the end of the year. But for this quarter, two of Netflix's most popular shows for the year so far were released during this quarter, including the third season of Ginny and Georgia and the final season of Squid Game. And that's helped boost performance for Netflix this quarter. And currency exchange is another factor contributing to Netflix's success this quarter. The U.S. currency has become quite weak, while more than 2/3 of Netflix's viewers are outside of the U.S.
One of my favorite statistics that I read this morning is that the Netflix market cap is worth more than, listen to this, Walt Disney, Comcast, and Warner Brothers Discovery, all of them together combined. Tells you that they do have competition in the space, albeit they're so much bigger than some of those competitions. What do you think, competitors, I should say, what do you think is going to be their biggest challenge in the coming months?
So you're absolutely right about Netflix's valuation right now. So its share prices have raised more than its share prices almost doubled over the past year, and it's now trading near the historic high in 2022. So if its performance for the rest of this year is anything short of meeting investors' enthusiasm, it's at risk of creating a disappointment. And also, Netflix's share of total TV viewing in the U.S. hasn't really changed over the past year, and its average viewer hasn't really watched more TV than before. And the streaming service space is only becoming more crowded, especially in Asia, which is one of Netflix's most important markets in terms of growth. So these are the challenges Netflix is still facing for the rest of this year and the coming few years.
Yeah, I remember one of the big stories around Netflix last year was they were going to start cracking down on password sharing. That strategy actually appears to have paid off.
It's paid off at first, but now the benefit of this strategy is sort of waning. So Netflix is seeking more ways to increase revenue, including adding a lower cost tier backed by advertisement. So this may be able to attract customers who may not mind watching some advertisement as long as the cost is low.
Yeah. Well, a reminder to me that maybe I need to watch more of the Netflix subscription that I have. I've got so many of these subscriptions, I don't use them to the full. Shirley Zhao, thank you so much for the reporting. Okay, it is Friday, TGIF, everybody. It's been quite the week. Good to be back in Dubai. But let's take a look at these equity markets and how they are performing. We are seeing a sea of green, so U.S. futures pointing towards a positive open, European markets as well. I should tell you, though, for the week, though, it's been quite a positive week for Wall Street. So for the week as a whole, the S&P is up 0.3%. NASDAQ up 1.2%. Both the S&P and the NASDAQ are at all-time highs. It didn't feel like that was going to happen a couple of months ago when we were staring down the barrel of tariff uncertainty. But here we are. The U.S. economy is performing better than expected. U.S. bank earnings have been strong. We're getting to the thick of earnings season, so a lot more to come next week. We'll get more clues about the U.S. economy on a micro level. But then also some of the actual numbers coming through this week has surprised to the upside as well. Yesterday, U.S. retail sales surprising strongly, too. So keep an eye on that. And then, of course, all of the Fed commentary that's come through. We had to go through the whole Fed Chair Jerome Powell questioning this week and whether he was going to manage to stay on in his position. It seems as though President Trump has now downplayed that. This is a picture of the U.S. yield curve. We are moving a little bit lower today, but the theme there has been one of steepening, with long-end yields rising more than the front end, as traders pricing in just a little under 2 rate cuts for the rest of this year. But that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.